Hello and welcome to VCC TV. This is Joseph Rai, and today we have with us a very special guest, Ms. Renuka Ramnath, who is the founder of Multiples Alternate Asset Management. A warm welcome to you, and thank you for joining us.
Thank you.
So demonetization has been the buzzword. So we'd like to understand how PE/VC deals are going to shape up in the light of the government's demonetization drive.
So I don't think there's going to be any big change in our strategy. Demonetization has had a short-term impact in most consumer-facing companies particularly. The impact of it on real estate is yet to be seen. It's too quick to say because it's also a function of what are the other series of measures the government will take to really eradicate the parallel economy from this country. But I don't think demonetization per se is going to change the investment strategy for our industry.
Okay. So there's also been a lot of talk about Donald Trump's protectionist policies. So how do you think that's going to impact the fundraising in the process and of the private equity firms and venture capital firms and going forward?
So again, it's very, very early to say, and everything that we are responding to today are what we pick up, in the media. Now, what exactly are Donald Trump's, translation of what he speaks into what gets implemented as policies, and does it have a sweeping change, in the IT sector or in any manufacturing sector, we'll have to really see. In any case, as a fund manager for us, the name of the game is diversification. So we would never invest 80% of our funds in export facing industries, and that to export facing industries primarily to America, right? So we would continue with our diversification thing. We would make sure that companies where we are investing who have the fundamental investment thesis is exports have something which is a very strong value proposition, which cannot be demolished or contested in a big hurry. So for instance, investments in pharma industry. We truly believe that the strengths that the Indian pharma industry has today to be a global supplier is not going to be easy for an American company to emulate by making it as Make in America. So there are certain advantages that we as India have built over very long periods of time which cannot be demolished overnight. So we would remain probably little more careful than what we would have kind of assumed without challenging in the past.
And Multiples also has had a lot of exposure to the financial services sector. And now fintech startups are very upbeat about the demonetization drive. So what is the outlook on the entire financial service sector now? And would you explore investing in some of the fintech companies?
See, financial inclusion is a very potent topic for Multiples. We find that as a very interesting and an important social initiative as well, which also has a very compelling economics. So any opportunities in financial inclusion, opportunities in affordable housing, fintech sector, looking at lending to SMEs and MSMEs are all theses that we are very, very carefully evaluating. Yeah. Demonetization or otherwise. This was our thesis even otherwise.
So you've invested in 5 companies, and you also invested in PVR, in which you had already invested in from the first fund. So will we see such investments going forward too?
So I would say that one of the key differentiators for Multiples is the desire of our entrepreneurs to come back and take money from us as they expand their business, which is very unusual. Typically, you tend to develop a little bit of contempt and a little bit of, I would say, tiredness when you work with somebody. But in Multiples, we have nurtured this philosophy of being a very strong partner to our portfolio companies, and our entrepreneurs love to work with us again and again. So this is a thesis that I will very strongly uphold. If there are such opportunities, nothing can be better than that, because you're working with somebody who you already know very well at an individual level and with businesses that you understand very well.
And which are the most attractive sectors, do you think, at the moment? And which are the sectors that multiples would, totally stay away from?
So our mandate doesn't allow us to put money in real estate and infrastructure, so that is something we will clearly stay away from. We don't like very asset intensive sectors because they are to be held for 30-40 years and more as an yield play. Since our return expectations are in the ballpark of 30% at an asset level, we like very high growth industries. So the Indian demographics and the Indian consumption story is a big story for us. Digital disruption is a big story for us. Financial inclusion is a big story for us. And when we get into manufacturing, it will be in sectors like pharmaceuticals or auto components, where you are really getting into a global manufacturing play and not a local manufacturing play. Yeah.
And multiples has been very agile on its exits. So what does the exit pipeline look like for this year?
So this year we want to return our first fund. We are working on 2 of our portfolio companies to go public. And we are also looking at a strategic exit in another portfolio company. So we have a pretty interesting set of things to do this year on exit. Yeah.
So that's going to happen in 2017 itself.
Yeah, it should happen. I mean,
So last year actually famously, differed with the majority view, who believe that getting exits in India is very difficult for private equity firms. You said that it's a myth that should be solidly
Correct.
demolished.
Yeah.
So but there's also concern that among private equity firms are often making exit at losses.
Yeah.
So does are LPs unforgivable and and say that you've made a loss and we're not going to give the money next time round? Is it like that?
Not at all. In fact, we will be doing a biggest disservice to ourselves and to our LPs if we don't exit out of assets which have limited potential from here and onwards. As I've always maintained that the biggest deterrent for exit is a high entry valuation. At some time or the other, the fund managers have to bite that bullet and say that if I can't generate a 20+% return on what I am holding from today onwards, I should not stay invested, because you're doing a very big disservice. And if you show exit agility, even if you have made losses, your LPs will come back and invest with you.
And I have to ask this question. So multiples was looking to enter the stressed asset management segment. So what is the progress on that?
So to begin with, we have put together a very senior and a highly experienced team. We are scouting the market very actively, evaluating a number of deals. It seems to be a slow journey because banks are not used to fair valuing their assets, and most assets probably are not saleable at the value at which they are holding in their books. So it's going to be a bit of a learning curve for the banks to work with private equity firms and develop the whole business model. So I'm keeping my expectations very moderate and looking at it as a more long-term strategy for multiples.
So last year you closed your second fund and you crossed the $1 billion assets under management mark. So what would be your advice to the GPs out there who are also looking to raise funds?
Yeah. So these numbers are fascinating and motivating, but they are not that important. My advice would be that try and build a robust institutional platform, hone certain skills, very uniquely in your platform, and engage your entire team to the cause of the platform that you are building. What is it that you are uniquely good at doing? Why do you have a right to win in that particular thesis? And how the entire team is passionately committed to that cause, is very, very important. Don't be short-termish, don't be tactical, and don't become a one or two fund wonder. You have to build a platform is all I would, a long-lasting institution is what I would say.